I remember when I was growing up, banking was all about going into a branch, whether it was to pay a bill, withdraw cash, or paying in a cheque. Now, I hardly ever visit my local branch, but I interact with my bank more than I ever used to, usually using the mobile app or sometimes online. But what will banking look like in 10 to 20 years' time? What are going to be the big changes we might see, and how are these going to impact banks, merchants, and consumers? Let's find out as we navigate digital payments.
Welcome to the Navigating Digital Payments podcast, brought to you by Worldline, bringing you the latest innovations, trends, and predictions about the future of payments.
Hello and welcome to the second episode of the second season of the Navigating Digital Payments podcast. I'm David Daly. I look after the Discovery Hub here at Worldline, and I'm really thrilled to be joined today by two fantastic guests. Both are veterans of the podcast. First up, we have Rick Kokelbergs, the founder and managing director of the banking scene. Rick, welcome to the podcast.
Thank you for inviting me. I can't wait to discover the Discovery Hub.
And I was going to say, Rick, you've also you've had a kind of an important milestone of your own recently, haven't you? Do you want to just mention that quickly?
I had a few, but I think you're referring to Innovation in Payments, my LinkedIn group, created in 2009, that recently became the world's biggest LinkedIn group purely dedicated on payments. Today we're 82,500 members big, I think. And it's growing with more than 100 members a day. Fantastic
achievement. But in some ways not surprising, because I have to say, if you're interested in anything payments, banking related, then I think it is the place to be on LinkedIn, let's say. So definitely join that group if you haven't already. And also joining us, Ina Kostiuk, my co-host and the global partner manager for the merchant services part of the Worldline business. Ina, welcome to the podcast.
Hello. Thank you for inviting me, and happy to be with you guys.
So we're going to look ahead into the kind of the longer term future during this episode to see, I guess, really what we think the big changes might be in banking. And in particular, I'd like to get your thoughts on two specific topics. And these are topics that we covered in the recently published second edition of our Navigating Digital Payments report. So the topics are the cashless society and the impact that could have around financial inclusion, and also the metaverse. Is that pure hype and buzz, or is it going to have a lasting impact? And then at the end, maybe a slightly dangerous question, but I also want to get your views on what important trends that there are that you think maybe we didn't cover in the report or we didn't give enough attention to. But first, maybe as I've mentioned that report, Rick, perhaps I can come to you and just ask what your first impressions were about the report and whether anything in particular jumped out at you.
I think it's a very valuable report that clearly took a lot of research. And what I like about it is that instead of just talking about yet another buzz, Worldline decided to look into the future and, like real horizon scanners, set up a couple of scenarios to define how that future might look like based on things that we see today. And that's, I think, a very solid basis to figure out where to navigate in terms of digital payments. So in that respect, the approach is, I think, eye-opening. Very good report. Although by doing those scenarios, sometimes you might look somehow to the extremes, as we will see throughout this interview as well. But of course, the truth is in the middle. And if you want to find that middle, you need to know the extremes as well, between no change and a lot of change. So in that respect, absolutely a good report, and glad that you invited me to share my opinion on some of those topics as well.
It's great to hear. It's an interesting observation as well, because I know the members of the Discovery Hub, as they were creating it, did put a lot of effort into the research side. And interestingly, although the first thing, or nearly the first thing in the report is that vision of how the world might look in 10 years' time, It's the last thing we write. So the first thing is the research and all the detailed content. And then we think, okay, if you take all of that into account, what does that mean for where the world could be in 10 years' time? And as you say, the danger when you're predicting over that kind of time horizon is either you're too extreme, not extreme enough, and also you may well be wrong about some things. But what surprises me, in the previous edition of the report, we had this, so this was 2 years ago, we had this idea of a bot that you could talk to and it would do things for you. And that seemed like science fantasy at that stage. And now that seems almost like it's not going to be 10 years' time. It's now, or, it's next year. So it's amazing how quickly things move.
And I also noticed that it's as a report which we produce, it's really a treasure map for anybody who is in the industry and they want to pick up the direction where things could go and develop, and how they can actually fit strategically within the product, within the payment, how they can actually develop. It's a really must read for everybody, players in the industry or around who is connected somehow in the payment. So I'm really proud to know that Discovery Hub is really doing that great job.
And one of the first sort of full chapter in the report is looking at the topic of financial inclusion, and it's looking at it through the lens, if you like, of could we end up with a cashless society in some countries or eventually in the whole world. Rick, maybe I can come to you and sort of ask you, what do you think when people are talking about a cashless society? Firstly, I suppose, what do they mean by that? And secondly, is that exciting for people? Is it scary for people? How do people feel about that, do you think?
Cashless society, when we talk about that, it's about, will we ever live in a world where physical money disappears? That's my definition of a cashless society. And that can be scary for some, can be very excited for others. Now, you see a couple of countries that are very ahead of the curve. Take Netherlands, the Nordics as well, a few others. COVID accelerated the process all over the world. And today you start to see some pushback, although I'm not convinced that that will remain. I think people will adapt to more digital going forward. And that's today also the main reason why central banks are pacing up their developments of a central bank digital currency. Not so much as a threat anymore against big tech, in my opinion, but more to be able to provide a public currency as an alternative to these private currencies in a digital world. Because today they are the issuers of physical cash. If physical cash disappears, how are they going to keep grip on the market? And that's the reason why there's currently so much push to a digital currency. So it will be cash, but digital cash, which is why I said that cashless society for me is about the physical cashless society, not so much cashless at large. And the reason why central banks are doing that today is because they want to make sure that they can keep grip, control over competition, innovation, etc., and help stimulate private players to keep developing a more efficient, cheaper, and more innovative payments environment for the sake of society and people.
And I think that's really interesting, isn't it? That I guess for people, probably all of us on this podcast, we're quite accustomed to paying digitally. We all probably have a smartphone. It's something, certainly I find, I mentioned it in the opening sequence, I found it much more convenient to do my banking via my phone than going to a branch. But that's not the case for everyone. Not everyone has a smartphone. Not everyone wants to do something via an app or has the skills to be able to do something via an app. So there is this, I can see how you feel about that kind of probably does depend where you are and how comfortable you are in the digital world generally, I would say.
And what capabilities you have. If you see refugees, some older but also disabled people sometimes. And then I had a talk with the CEO of BNP Paribas Fortis a few days back, where he spoke about their value proposition in Belgium, where they have BNP Paribas Fortis. Now recently they acquired Bpostbank Bank to make sure that they get sufficient physical traction in the Belgian market with the Bpost branches. And on top of that, they have Nickel for that population that doesn't have access to regular banking. Those people still exist. And they may be a very small minority in Belgium. It's getting bigger in the east of Europe, but it's getting massive compared to what we know in the US, for example, where people sometimes, even for religious reasons, decide not to have a bank account. And if you don't have a bank account, you don't have digital cash or digital money, so to say, today.
And it's the same we observe on a worldwide landscape, so that the big number of unbanked population in Latin and African countries. But me as a mother, I'm also concerned with kids, because anytime I talk with kids about money, for them anything being paid through the app, mobile phone, they don't see it and they do not feel it. Another day they asked me to order pizza when pizza man delivers pizza, not to go to pick up pizza. And I ask, why? We can have a walk. They said, then we don't have to pay when pizza man delivers pizza, because in their head they don't count, they don't feel this money, or they feel it differently, versus they have cash in hands and they count and calculate it.
I have a funny anecdote related to that, though. I recently had a talk with an anthropologist, and apparently there are studies that because of the change in payments behavior, people start seeing, and then that was, I think, a research in the Netherlands, where they started seeing that people were perceiving digital money as being more tangible than physical. So for increasingly higher population in the Netherlands, for example, they perceive cash in their pockets as being withdrawn from the account already. So if they would use that, that's just an addition. It's no longer part of their deposits because it's already away from the account. So there again, probably we'll see a shift there, and I'm convinced that in the future everything will be digital, whether it's through a bank account or something else. And probably also the perception of tangibility of cash versus digital will also change because of that. Hopefully, because otherwise it's going to be a challenging society in terms of financial well-being.
Interesting you mentioned that, because in the UK, due to several factors like economical situation, poor families are preferred to have cash when they go for shopping in order to really count how much they spend.
Well, it's not a general truth. They start seeing that at a bigger part of the population, probably still a minority, because I read the same messages as you experienced or saw in the UK as well. So it really depends today from person to person, but I can imagine that perception towards what money do I own will probably also change as we go into a digital world.
It's because I remember, Ina, I think it was a sort of social media trend in the UK, I think, at one time, about literally withdrawing cash and putting into separate envelopes the cash you would use for different things. But what you say also, Rick, reminds me of when I take my kids to a fairground, often you hand over £20 and you get 20 tokens. And of course, you don't think of those tokens as money.
But also for you, the £20 are gone.
Yeah, exactly. They're already gone. And what you're saying, Rick, is that people are starting to perceive physical cash a bit like you perceive those tokens at a fairground. I've already bought them. I may as well use them on the rides now. Yeah. So in other words, cash being, and I guess particularly in countries where there's no mandatory acceptance of cash, actually the physical cash could start to become less valuable than the cash in your account, which you can use anywhere, kind of thing. So it's really interesting. Ina, do you have a view on merchants that we work with? I mean, how do they view cash? Do they like accepting cash? Do they dislike cash? And what sort of benefits or drawbacks are there for them?
When we talk about merchants, we see that a lot of big brands, big names, really see cashless payment as a convenience and efficiency. For business, for management, for processes, for speed. But when you talk about small merchants, and that's what we observe mainly through partners, because our partners work a lot with medium-sized markets. For them, it's actually still could be costly to process payments. And they see that cash is kind of for free, and also partially cash is for their covering everyday costs. It's much easier to process, because if you pay online for in your shop on Friday evening, a merchant will receive money probably on Monday, not before. So for them, it's actually very important for their cash flow, and it impacts their day-to-day business. So they still prefer cash, and they even incentivize you if you pay cash by certain amount of purchase basket. So up to 10 euros, for example, they prefer you to pay cash. I see it in the market. We will see, of course, growth on digital payments, and big merchants want to have various options on digital payments, especially aligned with their reporting and easiness and efficiency. But we can't say that merchants don't want cash at all. Otherwise, they cut off some slice of their customers.
I also think in that respect, where retailers were in the driver's seat of pushing digital in the past, we'll see increasingly more consumers getting in that seat, pushing for digital payments, forcing these smaller merchants to simply accept at least one or two digital payment solutions, because otherwise they're losing revenues.
Yes, that's how their offers like Payconic
Yeah.
or SoftPOS being born, because it actually replies for demands on the market.
And I think that's interesting. There is one well-known holiday park in the UK that's gone completely cashless. Quite a revelation to me when I went. So no tipping of waiters or staff in cash, even little machines that would just take 50 pence or £1, all having a card reader on them. But of course, what you can see is that to some extent, the big saving for a merchant comes when you completely eliminate cash, because then you don't have any fixed costs of handling cash. Whereas, Ina, what you were saying for small merchants, I totally get that actually for them, if they have to go to the bank to pay in some cash anyway, it doesn't matter whether they're taking 10 euros or 100 euros or 1,000 euros. It's a fixed effort for them. And it's not a cost. It's not an external cost they're having to pay for. So they may well see that actually, if I'm having to handle cash anyway, then I'd rather accept cash where there are no payment acceptance charges. And maybe sticking on that cash management side, what Rick, do you see that it means for banks to manage cash, to handle cash?
Well, it's a cost, and banks are looking for creative solutions to reduce the cost, knowing that they have a social responsibility to still distribute cash. So for them, where in the past it was maybe even more considered as an expense, but also as a way to pull people in the branch, so to say, to sell more products. Today, under pressure of society, they increasingly start realizing that one way or another, they need to offer cash solutions to make sure that they keep that connection with society. On the other, they also need to make sure that they can do it at a cost-efficient way, which is why you have initiatives in the Netherlands, in Belgium as well, where banks set up joint ventures to offer cash through a third-party brand, which is then part of a joint venture. Or where, for example, like in the UK, but also in Belgium, the post office starts distributing cash in name of certain banks, etc. And that's, I think, an evolution that will not disappear anytime soon, because as long as we have cash, with the logical decline of cash, the cost per transaction will only increase. It's a love-hate relationship. They know they need to offer it, and they know that it will cost them a lot of money, and that cost will probably keep increasing if you relate that to the number of transactions, because the fixed cost is very, very heavy.
But if we see in the past, like even 10, 15 years ago, or even before, bank gained trust with their merchant, with their businesses, by distributing cash and collecting cash. Because it was some security, it was a special car, came to distribute cash, to take it from ATM and so on. So it was kind of this idol of trust. And now they have different idols of trust by ensuring that your digital money actually are saved. And with the consumers, it's enough. They don't need to see that bank actually is an institution we need to trust because of this cash collector security. And I think that is also like a change in the culture and the approach. Why they are less depending on it. Before, like nobody would imagine to cut it off or to delegate it to third party. No way. But now it's probably it's a trend.
But you make as well, Rick, a really good point around customer engagement and the customer relationship, that once upon a time, the way you had a good relationship with your customer as a bank was through the branch. And it even used to be that people knew their local branch manager, their bank manager. It was a very personal relationship. Now, of course, my bank can interact with me there's not many days that I don't look into my mobile banking app. I would never have gone into the branch that frequently. So the whole way to engage with customers has changed. And also what you mentioned there about the fact that as the amount of cash transactions in society reduces, the per transaction cost to society and to banks obviously goes up the less it's used, which is a challenge. And then I think I saw that, is it Sonect in Switzerland is another example of it's basically an app-based way of withdrawing cash from a merchant, and I think they're now the biggest distributor of cash in Switzerland. So it's moving people away from ATMs and that kind of infrastructure. And maybe just one last sort of point around cashless society and financial inclusion. Do you see, Ina, anything happening on the market to make digital payments more inclusive?
Well, yes and no at the same time. If you go outside of Europe, then we see many more options, and especially for African foreign bank populations in LATA, all digital payments and alternative payment methods and offerings for merchants, it's growing enormously. In Asia, we could see the single app through which you can do your purchase in marketplace, order your dinner, and probably find a date for Friday night, all at once. And it allows accessibility to people who really want to get and can. Back to the point, if you can handle your mobile phone and can do something with it and wish to do it. But in Europe, as Rick mentioned, there's never been a big portion of consumers who has that needs, because we are historically quite well already used to credit debit cards. The card or bank population percentage is super high, even like kids have from early age bank accounts, right? So why there is less needs in Europe for that, I see, and in the US as well. But on other developing countries, there are more and more needs. And I believe there are going to be such mix continues for next 5 to 10 years.
There was this second topic that I really wanted to pick both of your brains on, which is the metaverse. So Rick, maybe coming to you first. Very directly, metaverse, is it pure buzz or hype, or are we going to see some real lasting changes come out of it?
I think we're beyond the hype now, and I tried to be convinced about the metaverse, so I invited David Birch at our payments barbecue in September in Brussels, and unfortunately he didn't convince me either that much, not in the context of payments. I do believe in the metaverse on very specific use cases, like for example education, trainings where you can go in that virtual reality world and have a simulated or digital twin of a similar scenario in the real world, for example. But I still don't see myself and creating an avatar just for the fun of it. I think that fun aspect is slowly but steadily disappearing. And who knows what the Apple glasses are gonna create as a buzz. But also there, I'm convinced they will probably be augmenting more reality on certain use cases rather than building a new virtual world at large where people are expected to be doing payments, etc. So in the context of banking, for example, I do see an advantage where, for example, I would like to buy a house. Instead of going there on location, I can now enter the metaverse, visit the house, see what neighborhood's like, and instantly contact my bank for a mortgage. Does all that need to happen in the metaverse, or can you redirect in the real world through digital channels to your bank with all the required data by connecting metaverse and other reality? I don't know. But in terms of payments, that was one of the elements in the document where I thought, not so sure. Probably very relevant when we started doing the research, but maybe today a bit less. So yeah, it was a hype. We got over there. Now it's maturing, and remains to be seen where we'll end up. But I'm not convinced that will be used for day-to-day life.
I'll maybe share where I am on it. I think, and it's also a little bit the position in the report, which is you put the concept of the metaverse and this idea of a world that we all live in to one side and look more at the technologies. And there I see an application. And maybe this is not so dissimilar to what you're saying, Rick. But even there, you know, I think of the Apple VR and AR glasses. You know, I think they were £3,000 or $3,000, still very heavy. We're not at a stage where everyone in the family is going to have those. We're not going to walk around with them on the street. And yet, I still, with that, sort of start to see if the cost comes down and the ease of use. So if it is that with my prescription glasses, I can get the VR part in it and they're not much heavier. And again, this is not 1 year or 2 years. This is 5-10 years away. Then I start to think I could imagine that just like, you know, in the 1990s, online shopping was a tiny niche. I mean, no one was really doing online shopping except for some very specific purchases, and now it's everywhere. And of course, part of that is that everyone has a phone and every household has more than one device, and everything has become easier.
Yeah, but you're also buying something tangible. You're buying something that you need. In the metaverse, you're buying a virtual copy of something that you need.
Potentially, but I think also those lines might start to blur. So the example we have in the report was the holiday. You know, you want to check out the hotel. It's like your example of a house. I'd probably still want to go and check out the real physical house before viewing it. But the point is, I could maybe view 20 houses in an hour, sat at home with my VR glasses, and then the 2 or 3 that I like the most, I would go and do a physical viewing before buying. And
right, but do you need a payment solution in the metaverse to facilitate that, or will you go out of the metaverse, say that's the house I'm going to buy based on my experience in the metaverse?
And again, I think it depends. So this is why we use the holiday example in the report, because there you never go and view your holiday typically before you buy it anyway. So you may well want to stay with your VR headset and make the purchase. But you're right. In other cases, if it's a car or it's a house, you probably want to go and look at it physically first anyway. And so then having the payment inside the sort of virtual reality experience is less required. But I think,
which is, by the way, something we thought about with the car as well. Who would have thought that today you order a car online like Tesla?
So you're right, even that has changed. And I'm just also thinking a little bit about the payment impact. I see it a little bit like when all shopping was physical, cash worked really well. Yep. Cash really broke down when you wanted to buy online. And now, obviously, at Worldline, we're exploring a little bit, how can you make the payment without having to leave, basically without having to take your VR headset off? Because what you want to be able to do is continue inside the experience where you are, not have to leave that and do something on your phone or enter some card details. You know, that wouldn't make sense. So I think there is a potential impact, but I do think you're totally right. We're probably past the hype and down in some kind of negative trough where everyone's really skeptical about it. And I don't think it's going to be huge in 1 or 2 years' time. I could imagine that in 10 years' time or 20 years' time, we will say, wow, look at this. Everyone is now doing their banking via an augmented reality headset or doing their shopping via that. But in my mind, it's still a long way off. I may be proved wrong. We'll have to have a retrospective episode in 10 years' time, Rick, and see.
If we still do that.
So we'll get that booked in. Ina, from your side, I guess looking more from the merchant perspective, have you seen merchants already interested in this, experimenting with this?
First of all, I would say that I believe that metaverse eventually will develop towards a kind of a marketplace, but digital, versus like what we have now, more with VR, with the glasses. And indeed, we do see several merchants, like mainly the big brands like L'Oreal, Louis Vuitton, or IKEA, who are experimenting. So they don't really launch a mass product. They just experiment for the testing ideas, what it could be. In IKEA, do you want to offer that as a supplement option in case customer has glasses? Can they go and have the experience try different room setting. Then we have back to the question, IKEA is not a premium segment. How many of customers would have glasses to do such experiment? So they're just really on a way to try and to test. But we also have seen that even a car company like BMW and Mercedes are trying certain features where they're connected and integrate payment and see if you can drive with the virtual reality. But again, it's just like on an early experimenting stage. So for me, yes, there is some science that it could be potentially interesting and big, but it's very early stage.
Another thing we mentioned in the report, and I think we are seeing, is that sometimes doing augmented reality but via a phone, that's becoming increasingly common, I would say, because it avoids the need to have the expensive headgear. So in a moment, I'd like to ask both of you the perhaps slightly dangerous question: what do you think we missed or didn't cover in the report, but that is going to be important in the world of banking? But before we come on to that, I just want to let our listeners know that if you are interested in looking at the full report, you can download it for free from worldline.com. You just click on resources and then go to navigating digital payments. If you want to get in touch with the podcast, give us any feedback, let us know suggestions for future topics you'd like us to cover, then you can reach us by emailing ndp-podcast@worldline.com. And of course, as usual, if you haven't already, please take a moment to subscribe to the podcast and leave us a rating and a review. So, Rick, coming back to you first then, in your view, is there an important long-term trend that you think we were missing or perhaps didn't emphasize enough inside the report?
Well, I recently assisted an organization in their acquiring strategy. And one of the things that I highlighted in there that I didn't explicitly see, I think, in the report is the hybrid experience where you go to a restaurant or to a store and you order something online, you pay through the PSP, but you get the goods physical at location. Or in case of a restaurant, you go to the bar or you go to your table, you order in your app, you pay while ordering, and then you wait for the food to arrive. That's definitely where I see more coming up. Is that very far future? Probably not. That's already today, but it will grow over the coming years. What could have been interesting is also look at the trends from the past few years and see what happened and what didn't. For example, the wearables wasn't as successful as many hoped for 5 years ago. And it could be worth investigating why that is. And that could also lead to conclusions of how metaverse or other trends will evolve. But aside from that, in terms of long-term trends that we missed, I don't think there is any if you look at it from a business perspective. It was a very extensive report, so... Yeah.
Well, that's it. I can breathe a huge sigh of relief with that answer, Rick. But it's interesting you mention, I don't know if I would call that omni-channel or not, but it is something we touched on a bit as well, is that, maybe it started as online and in-store, and then it was kind of mobile online and in-store. Now there's also, say, WhatsApp or conversational platforms that you can, and they all have to be linked.
Yeah, absolutely, and that creates additional complexity that we probably haven't figured out yet for 100%. And omni-channel in the past was mostly used for linking or orchestrating different digital channels, which is why I prefer to call this one a hybrid experience, because suddenly you're shopping in person, physical, but you are paying through digital channels, and how you're going to orchestrate also that.
And also, I always think one path is the happy path. You buy something and you get the goods. But also, people want to return things or have a refund. And the number of times if you bought it in store, you can only get a refund in store. If you buy it online, you can only get a refund on. You kind of want the whole experience to be hybrid, not just one kind of simple use case. So I think it's becoming, I think, more complex rather than simpler, because actually the number of ways businesses are interacting with people is growing rather than shrinking. And Ina, from your side, is there something you think that we missed or didn't emphasize enough?
What I see is a bigger trend is the embedded finance and embedded payment, and it's collaboration between different industries. And it's not just what we're talking about as like particular retail or merchant as we used to think about it, but it's bigger scope with different technology, with different application, and to make sure that payment is getting actually seamless and it's just part of the process. Maybe it's on the sense it gets commodity, but it needs to be very convenient, trustful, and secure process still. And that I would say it is still topic which talks a lot to day-to-day businesses in every industry, from small till big, from technology to manufacturing. That is relevant.
It's interesting because that's a trend we're really seeing at the moment, I think, how to embed financial services relevant for banks and for other businesses inside other products. I do, with both of these responses, I think, of course, one aspect is that we were trying to look on the 5 to 10 year time horizon, and so perhaps sometimes we were deliberately not focusing on so much on the things that we're seeing happening right now. But I can see both of those things being really, really important and really topical. Okay, so that was a really interesting, really fascinating and quite wide-ranging discussion again, Rick and Ina. So it's fantastic to have you both back. I think on the financial inclusion part, it was, I think, really fascinating to understand how people's relationship with money might change and how they might start to see digital currency as being more real than physical currency. And then I think on the metaverse, maybe we all have slightly different views on the timings and exactly what will come out of it. But I think where we kind of reached a consensus was that it definitely was in some massive hype 1 or 2 years ago, and it's definitely not there now. And we probably will see something coming out of it. But it's probably not going to be that we're all spending 100% of our time interacting in a virtual world in the future. And then also, I think, interesting on that topic of what we might have missed, that it's very difficult. I mean, payments is such a broad field. You kind of can't cover everything. And what we tried to focus on was those things that are most important over the medium to long term. But there's so much in payments. It's why it's such an exciting space to be in that you can't cover it all. So really want to thank both of you for joining us again for this episode. So Rick, thank you so much.
Always a pleasure.
And Ina, thank you as well.
Pleasure was mine and shared. Thank you.
And that just leaves me to thank our dear listeners for joining us once again as we navigated digital payments.
Thank you for listening to the Navigating Digital Payments podcast, brought to you by Worldline. Join us next time to learn more about the latest innovations, trends, and predictions for the future of payments.